These are 5 things everyone can do to save money on their taxes. These are tax strategies for everyone, regardless of who you are. Number 1, annualized method for penalties.
Yeah, so a lot of people don't know about this when I ran into it this week, actually. So if you're self-employed or maybe you have a lot of rental income or other income that, is not from a W-2, so you don't have withholdings, you have to pay estimates. And if you don't, there's penalties. But what happens a lot of the time is you don't know what your income's going to be necessarily at the end of the year. So I had someone who had regular interest dividends. They're an investor. And at the end of the year, in December, they decided to sell a bunch of stock, which they didn't know that at the beginning of the year when they were paying their estimates. So, we were doing their tax return and realized, oh, shoot, they've got all these penalties because they didn't pay estimates earlier on in the year. So one of the strategies that you can use is you can actually break it down by quarter, the income that you had, and that cut the penalties more than half.
How do you do that, though? Like, how are you supposed to know? Like, everything you're supposed to be doing in the last quarter of the year makes no sense.
Right, exactly. That and that's, I think why they had this rule in there where you can pick this method.
So you do it quarterly.
Right, yeah. So normally you would just take your whole year, you'd estimate it, and you say, hey, I'm going to make whatever it is, 200 grand. And so you'd pay tax based on as if you earned 50 grand every quarter. But if it turns out that in the last quarter you sold a bunch of stuff and now your income's 500 grand, then you're behind from your first 3 quarters of estimates.
Which, by the way, you guys might not do this, but I meet with Eric. He's my CPA a long time. We meet in the last quarter to determine what we're doing, because sometimes we'll bump whatever we were going to do in the fourth quarter to the first quarter of next year to avoid this.
Right.
So that is another strategy.
Exactly. And that also helps because now, instead of, if it's an income event, you're now paying it in the next year. So you've basically deferred it an entire year when you have to pay that tax. And you can do the opposite. If it's an expense or a deduction, maybe you were going to do it in the first quarter, but then it makes sense to do it in the last quarter of the current year to accelerate that deduction.
Right. Because a lot of people think they have to do all these moves in the last quarter of the year. Even I thought that. But then you taught me, well, not always. It depends, right?
Right. Always.
Sometimes you bump it to the following quarter because you don't necessarily need the tax loss.
Exactly. Yeah, that's a tricky one. And you kind of have to balance a lot, because if you have too many deductions, we're so focused on getting all these deductions.
Right.
But sometimes if you have too many, it actually hurts you, because then they're limited going forward. So you really have to watch that.
Right. All right, number 2, contribution to retirement accounts. Let's jump into this. This is a confusing one for a lot of people.
Oh, I think it confuses a lot of kids too.
Oh my gosh.
But this is a nice one, because this is something you can take advantage of even after the year is over. So, for example, right now a lot of people are filing tax returns for 2023, but a lot of retirement accounts either allow you to make contributions to them by April 15th or even the extended deadlines, depending on whether you file a business or it's on your personal tax return. This may be September 15th or October 15th. So that's really awesome, because a lot of times it gives you may not know what your income is until the very last part of the year. And then, so you may not be making those contributions throughout. So you can decide to make it afterwards. And it also helps with cash management, because you can get a deduction for the year before, but actually make that cash contribution to this plan 9 months later in a lot of cases.
Yeah, so this happened to me too. I remember we would go down and plan with you, and you're like, what you really need to do is do a contribution, but we don't actually need to fund it till next year.
Right.
Which is weird to think about.
I know.
Like you actually get the credit for it. Now you have to do it, but you get the credit for it, and then you just got to come up with the money in the following year.
Yeah, it's super helpful, and you can even layer different plans on top of each other. So, for example, self-employment income is a lot of times the worst. And unfortunately, as a CPA, that's, a significant amount of my income. So what we do is we actually have like 3 different retirement type plans. So we do the 401k. So everyone has that option, the match on top of that, then profit sharing on top of that. And then we have what's called a cash balance plan, which is just another form of retirement plan. So you put all of these together, and all of a sudden you can increase the amount of deductions that you're taking.
Leave it up to CPAs to game the system. 3 different plans layered in. I don't even know what you just said, but that's awesome.
Well, I don't do the work. I just put it away like they say.
No, it makes complete sense to me, actually, after you say it. Okay, number 3, take account of any energy-efficient improvements you made in your home. Now, this is one that obviously the current administration's really pumping.
Yeah, it is. And this started, I mean, this has been going on for a while, but it keeps increasing. And so we had the Inflation Reduction Act, which took a lot of the previous credits, enhanced them, increased the limits, and it also increased what qualifies. So a lot of times what I'm finding is that if you look back on the tax year, you've probably done something to your house. So these credits, there's ones for your personal residence. There's also ones for businesses like rental properties, or if you use real estate in your business. And they have different limitations, but a lot of times people are doing things like putting, new double pane windows and new doors that are energy efficient, or maybe they're adding or replacing, HVAC units, all of those types of things. So you definitely want to check. I mean, it's obviously better to check ahead of time whether those improvements will qualify, because it might make sense to do something else, or just at least go back and look, because a lot of them, with the standards that we have today, a lot of them just qualify and you may not even realize it. So that's kind of just easy.
Is there a list somewhere like that? Where do people go?
Yeah, good question. So I would start with just, going on the IRS website, and they have, you can look for Inflation Reduction Act, and then also search for energy efficient credits.
Right.
And it'll bring up a whole slew of, sites that will list.
Yeah, because a lot of people think this is like a solar thing, but it's really not. There's a whole bunch of things inside of here. I know that because you guys might not know, but you can get these credits with your rentals.
Yeah.
Like, this is not just a home ownership thing, and some of you might need it.
Yeah, no, it can make a big difference, especially as expensive as everything's getting. So a lot of the credits are up to 30% of the cost. Some of them have dollar amount limits, so you may not reach the 30% if you're spending too much. But the other important thing is look ahead, because most of the limits are on an annual basis. So it may be that it makes sense to do some of the improvements right now. Maybe you need to do something in the fourth quarter, and then wait until the first quarter of the next year to do the rest. That way you don't end up capped on.
Oh, that's a good point, because they have to be in service.
Right.
So what that means is you can't buy windows and not install them. They have to be installed.
Exactly.
Right. So that's a big one. So the fourth one, pass-through entity tax payments. Let's discuss that. I have no idea what this is.
Oh, yeah. So this is actually an important one for a lot of business owners. So what this is, if you remember back when Trump had passed his tax law back in 2018, it took away the state income tax deduction to a large extent. And in a lot of states, and people in higher income states like California complained a lot. So essentially they limited the state income tax deduction to $10,000 a year. And so the states basically looked at this and, said, how can we get around this? And so what they did was they said, okay, let's take entities. So this would be partnerships and S corporations, where those types of entities typically don't pay income tax themselves. It typically just passes through the income to the ultimate taxpayers. And so what the state said was, if you have this type of business, you can elect to pay the tax that you would pay at the individual level, but pay it through the business instead. And by doing that, you bypass that $10,000 limitation.
That's a big deal.
So it adds that extra deduction.
So it's a business expense.
Right, exactly.
Instead of a personal expense.
Exactly.
Wow.
So if you're filing on a Schedule C right now, it might make sense to restructure depending on how much income you have to be able to
I guarantee you guys, if you guys are using a bookkeeper, they probably don't know this.
Right.
No, seriously, like that. A lot of people don't use CPAs. And, Eric, how many tax returns do I have?
Too many.
Yeah, I know. He sent me a photo. The tax returns they're like almost 4 feet high.
Yeah, it's like 150 or something.
Yeah,
and you're always adding too many.
Yeah, so obviously we use a CPA firm, but I started with a bookkeeper. So a lot of times, a lot of frustration people have is just that a lot of times they don't know these kinds of things, right?
Right. Yeah. And that's what's important about this. Actually brings me to the next point, which is, making sure that you have all your documents and books in place, because what people don't realize, someone may go to a CPA and say, hey, I want you to save me all this money. And you're like, okay, where's your financials? And they're like, financials?
Yeah.
You're like, yeah, I can't do anything without, I have no idea what income, what deductions you have if you don't keep any financials. So really important to stay on top of that. And people don't realize that, because it's the last thing anyone wants to do. It's the administrative.
This is the fifth point, but we will give you a sixth, by the way. You want to give him a sixth in a minute? But let's stick on this real quick. I was guilty of this, you remember? Oh, I was horrible, because I hate gathering all the crap I had to go back through all my stuff, but I did it this year, by the way. I turned in all my stuff on time. I think it might be the first time ever. But I just have a box. I just throw it in there, man. And because I know that I'm going to have the medical stuff, the charitable stuff, all the different stuff that you get for interest and dividends and all those kinds of things. I just throw it in one spot. And the truth is, Eric, when you guys asked me to go do it all this year, I just went and pulled that box out, and I had a stack of papers, I don't know, foot high or something. I just shuffled through them all, and everything was in there.
Yep.
Yeah. So it's easier than you think. You don't have to be so organized.
Right.
But it's the same stuff every time.
Yeah.
Right?
Yeah, it is year after year. Maybe something changes, but a lot of times, with all the reporting these days, there's a form for everything.
Yeah.
So
another way to do it is I would scan it, take a screenshot, and just send it to you.
Yeah.
On the fly. Well, it's better that he has it than I have it, because I'm going to lose it probably.
Emails at midnight or
yeah. Well, at least you have everything on. You just got to print it on your end. But that is a big one. Let's give him a sixth. You want to?
Yeah, absolutely.
Okay, so we're going to talk about the potential new tax law, right? Because there's a few things coming: the tax relief for American family and the Workers Act. You want to talk about that?
Yes. So this is actually a pretty big deal potentially. So right now, as we're filming this, we're about 2 weeks from the April 15th deadline. And what I often hear a lot of times is that people are all about, I want to file before the deadline, I want to get my taxes done. And everyone has their own reason a lot, or maybe afraid that they're going to be more likely to be audited or something if they extend. But this year, there's this proposal, and it's already passed the House. It's been sitting with the Senate, frankly, for too long. So the odds of it passing at this point are relatively low, but there's still a chance that it'll pass. And so if you file too early, you either have to incur more cost to amend to get benefits from it, or depending on the type of return, maybe it's not feasible to amend. So there's two main aspects to this. The first one is bonus depreciation. So for 2023, bonus was set to go down from 100% to 80%. And what this meant was, instead of writing off, 100% of the asset, you can only write off 80% in 2023. And so this law would extend the 100% retroactive back to 2023. So if you're calculating your depreciation deductions, or you're doing a cost segregation study, or any kind of big purchase.
Yeah, so this is like the jet. We bought a jet. We got 100%. If we would have bought it in 23, it would have been 80. Now, I know that's millions of dollars. So, same thing with farm equipment, same thing with trucks if you're a construction company, or billboards.
Yeah, cars.
These are big purchases. So this 20% is a big deal.
Yeah, remodels, tons of stuff on rental properties. So yeah, it makes a big difference. So what we're telling a lot of our clients is, hey, we don't know if it's going to pass or not, but you're better off waiting to file to see if it does. That way we don't have to go back and amend, because it's going to cost.
So this is good news. It means that I don't have to get you all my stuff right away.
Oh, let's not get too far.
What? So you're saying not to file. This is good. This is the best I've ever heard. Because usually you're all on me on these deadlines. But to your point, we actually were looking at a company where we're looking at bonus depreciation for 2023.
Right.
And we're like, well, let's wait. Right.
Yeah.
Because of this exact issue. Because once you amend, it's actually expensive.
It's more expensive, and the IRS has changed some of the rules depending on the types of returns that you file. So for example, partnerships, a large number of partnerships you can't actually amend in the traditional way. You have to do it through this other long process that is very different, and so it's generally not worth it. So you want to make sure you file correctly the first time.
Yeah. So awesome, Eric. Thanks, brother. So hopefully you guys got all 5 and the bonus 6. Eric, appreciate your wisdom every time, and these are things people could do this year, right now. Pay attention. Make sure that you're asking your bookkeeper. They may or may not know these things. Thanks, man.